Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call of Fiem Industries Limited, hosted by Monarch Networth Capital Limited. Kindly note this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I would now hand the conference over to Mr. Sahil Sanghvi from Monarch Networth Capital Limited. Thank you, and over to you, sir.
Yeah, thank you, Muskan. Good evening, everyone. On behalf of Monarch Networth Capital, I welcome you all to the Q1 FY26 conference call of Fiem Industries Limited. We will start the call with the initial comments about the results and the future outlook of the company, and then we'll open the floor for question and answers. Now, I'll hand over the call to Mr. J.K. Jain, Chairman and Managing Director of the company. Over to you, Jain, sir.
Thank you. Good afternoon and welcome to the Q1 FY26 earnings call of Fiem Industries Limited. Joining me on today's call are Rahul Jain, Joint Managing Director, Rajesh Sharma, Joint Managing Director, Vineet Sahni, CEO and Director, Arvind Chauhan, Company Secretary, O.P. Gupta, CFO, and other members of the finance team. Our investor presentations and the results are now available on our website and the stock exchange. We trust you must have reviewed the same. Let me start with a brief overview of Indian economy. India remains the fastest growing major economy in the world, forecasted to grow at 6.4% in FY26. This strong performance is driven by the robust. However, the recent imposition of the steep US tariff, now totaling up to 50% on Indian export, is creating near-term headwind for some sectors. Fiem remains unaffected with this challenge. The long-term outlook remains optimistic and strong. India's strong economic fundamentals, low inflation, healthy government finances, and ongoing reforms will continue to boost the sentiment. Efforts to expand export market and build new trade agreements like the recent UK FTA should keep the country on a steady growth path. Now let me turn my attention to the domestic automotive industries. The Indian two-wheeler industries began FY26 on a soft note with domestic production volumes of 5.9 million units, which is flat over last year. This is largely seasonal and demand typically soften in the early months of this fiscal year. With the festive season kicking in, supported by a good monsoon, the industry is poised for a healthy rebound. Against this backdrop, Fiem has been able to post a very strong performance for Q1 FY26. Our sales have grown more than 13% to rupees 649 crores, and we were able to deliver a PAT of rupees 56 crores. This growth was fueled by the robust demand from our key OEM customers like TVS, Royal Enfield, and Yamaha, which has contributed to this significant growth. Let me now turn my attention to the four-wheeler segment, which continue to move forward. Our first
Ladies and gentlemen, we have been disconnected the management line. Wait until we connect to the management.
We are also very pleased to share that we have received development orders for 3 additional products from Force Motors. Our engagement with the customer on new technology is progressing well. This successful entry into the four-wheeler space marks a significant leap forward in our journey to become a multi-segment global player. Building on this performance, Fiem remains well positioned to capitalize on industry's recovery through our technology investment and customer partnerships. One such investment is our state-of-art EMC/EMI electronic validation laboratory, now under installation and set to be the first of its kind in the Indian automotive lighting industries. This facility will unite our mechanical, optical, and electronic capabilities under one roof. As lighting becomes the increasing integrated with electronics and communication features, this lab will be a game changer, strengthening our technological edge and reinforcing Fiem's leadership in performance and quality. Looking ahead to FY26, I am confident in both the industry's growth potential and the Fiem's strong position to capitalize on it. With this, I hand over to Mr. O.P. Gupta and the finance team to update on operational performance.
Thank you, sir. Good afternoon to everyone. I would like to present the Q1 number for FY26 compared to Q1 of FY25. During the quarter, the company has registered sales of rupees 649.07 crore as compared to rupees 573.61 crore over the same quarter last year, registering a growth of 13.16%. LED lighting share in total automotive lighting stands at 63.92%. The EBITDA in Q1 is rupees 87.36 crore, translating into an EBITDA margin of 13.46% as compared to rupees 78.77 crore over the same quarter last year with EBITDA margin of 13.73%. The PAT of the company has also increased to rupees 56.05 crore as compared to rupees 49.2 crore in Q1 of FY25, representing an increase of 13.92%. During the quarter, the company has made a capex of rupees 16.53 crore. With this, I end the financial brief, and now the floor is open for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Shubham Segal from Simple. Please go ahead.
Hello, I'm audible?
Yes, sir.
Yeah, thanks for the opportunity. My first question is, so we are with our non-LED portfolio with around 170 to do you see this scale further going down or the market in terms of supply and our positioning? So let's stable and do you think that this number can sustain at these levels?
Can you please repeat this question? We lost you in between.
Yes. So
Mr. Shubham, I'm sorry to interrupt. So your audio is not clear. We can't hear you properly. Hello, Mr. Shubham. Sir, I just
Hello,
Yes, now you are clear. Go ahead.
Hello, I'm audible? Yeah.
Yes, sir.
Yeah. My question was that our non-LED portfolio has been stable around 170 to 180 crores. So I just wanted to ask that do you see this scale further going down or should we sustain at these?
Yeah. Is there any second part or see on the LED, what we maintained is that we are currently at 64% as our total automotive sales, and this will continue to go up. And over the next couple of years, this number should increasingly go up because our pipeline is 100% LED. All the new models that we are doing is LED.
Okay, got it. My next question was, with our LED business scaling pretty strongly, as you mentioned, so how many do we plan to add over the next 2 years? And what percentage of regular CapEx will be behind molds?
You may want to just repeat that question. Operator, if you could sort of help with the line. We are getting a lot of void in between. In between, we can't hear this. So if you could repeat that question.
Yeah, I'll repeat it. Yes, definitely. So I was saying that our LED business has been scaling pretty strongly. So how many SMT lines do we have as of now, and how many do we plan to add over the next 2 years? And what percentage of regular capex will be behind molds?
So we are looking to add another 10 SMT lines over the next couple of years.
How do we have currently?
As for that, we have 10 SMT lines in our company, and we are planning for another 10 machines in next 1 year.
Okay, and what percentage of regular capex will be behind molds?
See the total capex, if I was to highlight for the current year, is around 75 to 100 crore. This includes everything. There's a new facility that is being planned, new capex on SMT lines and so on. So that's a composite figure.
Okay, got it. My next question was about our key customer HSMI. So like some growth that we have achieved would be due to the better realizations, like from the shift to LED. But apart from this, if we see that growth with HSMI versus their production rate, it has been at par or even lower at times. So like, would you be able to provide any color on this?
So our growth is largely in line with how much growth HMSI is showing. HMSI is almost had a fat